what is going on with commodities. I don't understand. But what I know is that they're going crazy. And here's an opportunity for you to make some money in your trading account. We're going to see 3 commodity stocks, copper-based, by the way, that are likely to move your account up from anywhere between 10% to 20%. It's a big claim, but by the end of this video, it's going to make sense. Now, I know copper is not the most beautiful thing out there, and it doesn't sound like an electric car, but if it's going to bring me money, it becomes beautiful. We're also going to look into ETFs of commodities that can really bring your account up 20% over the next 2 months. We'll also talk about how to buy it, how to hold it, and when to sell it so that when it happens for you, it's going to be beautiful. We're also going to see what is happening in commodities. These are some really left out opportunities that are going to make you money that everybody just leaves on the table. And I hate to see it happen. I don't see anybody talking about it, but I keep trading them and I've made some really good money from them in the past. Now, the first thing I want you to understand and to learn is that stocks and commodities always move together. If gold is moving, silver must be moving. So let's look here at, this is a global copper ETF that nobody out there looks at. And I hate that, because look at this move in 2020. That was beautiful. The thing almost tripled. It went from $11 to $46. And a lot of people were wasting their time in tech stocks. This thing was moving. Now, let me show you something interesting. When the ETF moves, which is like the index for these stocks, look at all the copper stocks. They're all moving with it. It's never on the same day, but it's around the same time. Let's go farther in time. Just look. Just follow the chart. Follow the cursor. Look at how it falls. Look at how it falls. When it's falling, they all fall together. I can't make this up. I just can't make this up. This is literally history just being shown to you right now. And it keeps happening over and over again in other sectors as well. Look, same day you can just short every stock here and you'll get, a good return. And when it comes to consolidation, they all go up together. So you can see that they move in groups. And for some reason, it has been in an ugly consolidation. And earlier this year in March, all hell broke loose. This is the ETF, and these 3 here are stocks, which are the biggest in the copper space. They all jumped out on the same day. They all jumped out on the same day. Is it a coincidence? No, because I've seen this happen many times over and over again. But as I'm about to show you, they don't all move up the same amount. This one moved up, let me say this move. Currently, it's up 50%, which doesn't look good, but just wait for the others. This one, SCCO, moved up 62%, which is bigger than the ETF. That's amazing. What about HBM? Moved up 109%. You're like, whoa, man, I should have been in HBM. Okay, let's see. Taseko Mines. Actually, this guy actually interviewed me for an internship when I was in school. 125%. Seriously. Anyway, so we can see that our 2 strongest stocks are HBM, and TGB. So when a sector is moving, you always want to be in the best stocks in the sector, the 2 best ones, because the 2 best stocks actually move a difference of 60% almost compared to the others. So you want to be in the best, and an ETF is the average of all of them. So holding the ETF is never the best idea, contrary to popular belief. You want to hold the 2 best stocks in the ETF. And right now, the opportunity has arisen again. After that big consolidation, these copper stocks have consolidated again here, and they're ready to buy. Now, would I buy HBM? Would I buy it? I wouldn't buy it. You know why? Because it has already broken out and it's a bit late. But don't you be sad, because Taseko Mines, okay, this one I got into it yesterday I should have made this video yesterday because I'm already up 10% on this position. It's not too far. It's not too far. If you're a bit careful, you can still get in. I think it's just going to go up around 30 to 40%. I never know how far these things are going to go up. If you find this content interesting and engaging and you feel like you found value, I want you to help me boost this video by hitting the like button and commenting below your favorite stock or which of these stocks you think is likely to go up, or maybe something that you've learned from this video, so that it can boost the algorithm so that I can get more views and reach out to more people and help more people get money. You win, I win, everybody is happy, right? How do I know how far it's likely to go up? One thing that I learned is that it normally goes up around 6 times my risk. And what risk do I use? I use 1.5 of the 14-day average true range. And I'll show you right in a second. So let's go HPM. It broke out here. What was the average true range on that day? That's this yellow thing here. Let's see. 0.3. I'll use 0.3. Okay. I bought it. On that day, it kind of faked out. And yeah, 0.3. Let's go. Actually, this one moved up. I'd have sold around here because this is the kind of consolidation. This one first went up. So far, it's gone up 15 times the risk without a major consolidation. So that's a very rare occurrence. So this is a good example, SSEO. What I'm saying is that it will go up. So this is on this side, there's a 4-day chart, and this is my daily chart. Normally, what I realize is that it will go up around 5 to 6 times. This one went up 10 times. If you risk $100, you're going to make $1,000. Crazy. So yeah, and then it normally sits for about 4 weeks because here I count. So each of these bars on this side is a 4-day bar. So it sits and now it's jumping out again. Another one, which is TGB. Like I told you, I already got into this one. And you see here, the volume is even very high. The volume is 5 times the average. What does that tell you? The mutual funds are buying this thing because the normal person or us with retail accounts, we cannot move this stock that much. It's the mutual funds that do it. So the first time it moved times 8 of our risk, like I told you guys, it normally moves around 5 to around 7. 8 is a bit extreme. It doesn't happen that often. And then here it's going to sit and I think it's going to move around 38%. But now it's a little bit extended, but like I said, you can get in if you're careful. But yeah, those are the copper stocks that you could make money on. TGB, SSEO right now, it's not yet too far. Like we talked about. I got into SSEO, but then I sold my position immediately and went into TGB because that one was likely to go up 40%, while this one looks like it's only going to do 22%, but this is still good money. And if you just like use risk, let's say you risk $20, you're going to make $100 because normally it's relative to how much it averagely moves. So some stocks will move up 100%, but if their average true range is 10%, then that's only times 10. While this one might move up only 20%, but if it normally moves up only 2%, then also that's also a times 10 increase normally to what it normally does. So how do we enter these stocks? Normally what I do is that, so I entered around 2.67. I told you I risk a 1.5 of the average true range, which I already calculated it here. It's this yellow thing. That yellow number there. So you see, I risk that. And then I see where one of my risk is. So I put a line there. Normally and a lot. For this video, I'll just use a line. Then I put another line here. Just halfway. I just eyeball it. When I was younger, I used to really do the 50%. But nowadays, when I'm older, just eyeball that thing, man. Don't stress out. So yeah. So I see it breaking out. I want to count 3 days where the close of the day is higher than the previous green day. So the first green day is here. The second green day, which closed above the high, is this one. Then the third one is this one. So I can buy as soon as it breaks above this high. So you can see I was even a bit late. I wasn't late. I was actually scared to go in so early. But once I looked at the other stocks in the sector that were all breaking out, then I got confidence that this one is going to move because they always move in groups. Nowadays, I just buy fixed positions, but what I would advise you to do is get your account and risk 0.4% for each position. So you put in here, let's say your account is $5,000. Go in here, type in risk is $20. It will tell you how many shares you should be getting. So you should get 117 shares. Currently, I don't use this method. It's because I just buy fixed cash positions now. I'll just buy 1,000 of stock or 10,000. I don't do this anymore, but this is a good way for you guys to start. So get that risk through. So you see 117. Yeah. So yeah, you buy 117 shares here. Once the stock moves and hits this, you buy another 117 shares. We want to give the stock more money if it's going in our favor. So in case it never even hits this line, the worst you could lose is just 0.4% of your account, which doesn't hurt. If it hits this line, I calculated that when it reaches here, it normally has a 70% chance that it's never going back here. So I normally even raise my risk. I would move my stop from 2.5 to just here. Then once it hits this third line, I normally buy the third position. But this is only if I'm very confident and if it's very bullish. And also for amateurs, don't buy the third position. Just leave it until you're really comfortable and you've seen these things happen over and over again. So yeah, I buy the third position here. My average position is going to be 2.74 around there. And I'm going to have 1.2 risk in my account. So once it goes up 6 times, so let's say this is where it's supposed to be times 6. That means that my average position would be here. And now that means 5.6 times. Okay, so it's likely to go up 5.6 times what I risked. So if I pull up my calculator, okay, and it's 5.6 times 1.2, 6.72. That means I'm getting 6.72% on my account for this particular stock. And once you see a whole industry moving, you can get 2 to 3 of the stocks. In this particular position, it even went up 8 times. Let's say 1.2 times 8. So if you had 3 stocks in this sector that went up 8 times, and you multiply this times 3, you would have multiplied your account by 28%. I normally don't pick 3 stocks, I just pick 2. So let me say 9.6% of my account times 2. That normally means from 2 positions, it's going to bring up my account by 20%. And while 20% is not impressive, the fact is that if you do this 3 times a year, 1.2 times 1.2 times 1.2. If you keep compounding your money, that's a 70% by the end of the year. And that, my friends, is a good way for you to make money. I hope you've learned something from this video, and I hope the stocks can make you some money in the coming month. Watch your risk, always be careful. And of course, this is not financial advice, but I'm just showing you how I trade and how I make money so that you can do the same. Thank you.